Hello traders, hello everyone, my name is Gregor and welcome to a new video surfing the Elliott waves where I'll look at some of the most interesting markets for this week. I will cover Euro, Aussie, Pound, Silver, Crude and New Zealand Dollar versus Japanese Yen. Now firstly, looking at the Euro Dollar, if you recall, I've been tracking two interpretations. Either here we are headed higher for wave C above 2018 highs, or maybe we'll just remain sideways in consolidation, which could be even a triangle in the end. In both cases, I still think that both wave counts actually are still valid. Now the first one indicates that we could be maybe already trading in wave D, but normally that wave D within a triangle should then move to the lower side of this trading range. So ideally this leg then has room for more weakness. At the same time, I'm looking at the second wave count where this current support seems to be a very strong one and could definitely limit the weakness if we consider that this could be even a wave 4 retracement as part of an ongoing bullish cycle that I'm observing from March levels of last year. So in both cases, looking at longer term direction, of course, they are not similar. But when looking at the short term structures, you can actually see that we expected this reversal. Either here for a bounce, a temporary one into wave B, meaning you will expect a free wave rally, or maybe this free wave rally, okay, can later even become a 5-wave recovery. Okay, so this is very key what will happen in the next few weeks, but it looks like that on the short-term basis, even if I have two different wave counts, I'm looking for one direction. So let's go to the 4-hour time frame, and here is this interpretation where we have a very nice and sharp break out of this downward channel. It looks like we have an impulse here, so I'm looking for more upside after pullback. Now pullbacks are healthy and could definitely occur away from that former wave 4. It's a very strong resistance. Normally at these termination levels you will see a lot of orders, especially stop orders. That's why market is trying to go into this direction like a magnet maybe, and then pulling back down for a new correction after those orders are being triggered. So what we are now expecting is just a temporary setback and then even more upside. Now let's take a look also we set on Aussie dollar. Now on Aussie dollar here, looking at the daily chart, I know that this pullback was quite deep with an extended leg here in a third wave down, which could actually be wave C of a contour trend movement. So I'm waiting on potential overlap or break above 75.23 level, because that was wave A level. So if this will be an overlap, then of course any bearish interpretations would be invalidated with a 5-wave drop. For example, if someone thinks that's a wave 4, then this wave 4 should not step into the territory of that wave 1. That's why I'm labeling this as a bullish level. And I would not be surprised actually to see this level overlapped. Why? Because if I look closely here on the 4-hour chart, you can actually see that this looks pretty strong move here away from the lows, and I've been looking and waiting for this reversal to happen back in August, because move out of this triangle, as you know, told us that this is a final part of a higher degree structure. We didn't know, and we still don't know, if that's wave 5 of this big wave C or maybe even wave 3. In either case, we expected a rally, and so far this rally has a very strong impulsive characteristics. So I'll be looking for even more upside after any intraday setbacks. And as I said, once we get an overlap with this 75.23 figure, that's when our big picture would remain bullish. Now let's take a look also on cable. Now cable here is actually still sideways, very tricky price action. Can be wave 4 of course, but notice that we haven't seen a retracement of 38.2%, so it's still still very valid scenario actually to see this wave 4 a little bit deeper. Or if this market will just remain in this sideways consolidation range, then this could also be a triangle here for a fourth wave. So for now it's a little bit tough situation because we are on no man's land. The corrections are unfolding, and always when that's the case, of course, there are more corrections or patterns possible. So that's why we will have to be very careful here, but at least in the short term it looks like that we have room for more weakness here. I'm still favoring the idea, after all, that we are in a triangle, and if that's the case, then maybe we are already here pulling back for a final wave E to complete this triangle pattern. Now very nice supports are at 1.3680 to 1.3730 area, so that's the region where we would be expecting potential bounce. So let's assume that we pull down into this area in this week, and then you will see a recovery, and if recovery can take us back towards 1.39 figure by the end of the week, then I think that this would be a very strong bullish case for cable looking forward. Okay, so firstly we have to see if these supports will really limit the weakness, and afterwards of course we want to see a break of wave D point, because in a triangle that's usually the confirmation for a resumption of a higher degree trend. Now let's take a look also on silver. Now looking at silver here, very big picture. I am observing a potential bottom formation here. It was in, of course, after this COVID crisis began last year. So I'm now expecting more strength after this consolidation. Notice that this was a very strong move in a very short period of time, and now we are just moving sideways since summer of last year. So I think this makes a perfect case to be a potential correction on the way up, because prices are choppy, tricky, not very clear and directional. And usually when that's the case, the characteristics suggest that this is a correction. Also, we have some very nice supports down here, so either we see a very deep pullback, or maybe we'll just remain sideways here in consolidation, like potential triangle. But in either case, I think that sooner or later we will see a recovery. Now, what I'm observing here on a daily for the next few weeks, or I should say maybe even days, is if we can rally here above $25, okay, then I think that we will see more upside, and we could easily see the repeat of the price action that we have seen here back in December. Notice when market came to the downside and then it broke this trend line, we have seen a quite nice recovery. This has then been the case also here in April, and now again we are approaching this trend line. Of course, there is no breakout yet, but I think this could be quite interesting if we can pull prices here above $25, because I think that then we could easily see something similar again here in September, by the end of September. If suddenly, let's say that we break to below $22, then I would most likely be looking here for this wave B, maybe even wave 2, to be like an ending diagonal, and then I would be expecting a bounce. Okay, but still I would be looking for a corrective price action away from that 2020 highs. Now let's take a look also on crude oil. Now crude oil, I've been covering this one last week as well. As you know, I think that we could be here either completing already a corrective drop from the highs, and we are headed back to new 2021 levels, or maybe we are in the middle of this complex correction. Okay, you can see here alternate count deeper complex correction indicates that we could even drop towards $57 per barrel, where was this former wave 4. But what it's again significant about these interpretations, where I have two interpretations. First is that this was already completed correction. The second one is that we will see a complex correction. But the key is that on the 4-hour chart here, you can see a very nice rise here out of this downward channel, and usually this rise indicates that price is headed even higher, because I can see here an impulse. Now maybe that's a minor flat formation here on intraday chart, so watch out for $67 to be a potential support where I would be looking for a new resumption higher. Now if we go a little bit deeper here, the next support would clearly be here, identified around $65, where we already bottomed here twice, firstly here in July and then also here at the start of August. Okay, so I would be looking for more upside either for wave C or wave 3 after this dip. Now let's take a look also on final market today, which will be New Zealand dollar against Japanese yen. Now firstly, looking here at the big picture, I think that direction is very clearly to the upside. You have higher highs, you have higher swing lows, meaning that this is interpretation of an uptrend, and a very strong one, especially we could see a very sharp acceleration higher after this very deep and quite complex corrective setback, but it was moving 3 waves. Also, you could look into this like a bullish flag that has recently been broken. So if you are favoring the basic technical analysis, that's also another approach how to look at the markets. So based on basic technical analysis, meaning broken flag, and also in combination with the Elliott wave principle, where you have this 3 wave drop back to this previous 75-60 support, and also towards this lower trend line of this parallel channel, well, both interpretations indicates that we could see more upside. Also, it's very nice to see such a very strong recovery. Clearly looks like an impulse, so watch out for further upside. Of course, we don't know if market will continue higher straight from here, from that minor consolidation, or we will see a new pullbacks. Of course, pullbacks are something that we always want to look for, especially because they give us an opportunity to join the trend. Now, if that would happen from here, then watch out maybe this support line if we can come close to this trend line. Also, another trend line could be like that, connecting wave A and wave C swing highs. Okay, but overall, I think that those pullbacks could be opportunity to join this trend while the market is trading above this invalidation level. Okay, also it's very important to keep an eye on Nikkei. As you know, Nikkei is currently trying to resume the uptrend after this very complex corrective drop, and we've been looking for this to be a correction. We actually were looking for this breakout to confirm the uptrend. As you can see, the market is in a sharp rise, so indicates more upside. Definitely I'm looking for a retracement back to this 2021 highs, and this means that Japanese yen could stay on a back foot, meaning that yen crosses could see more upside, especially commodity currencies versus Japanese yen. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, I will talk to you next week. Bye.